Jesse Baker. Shall we do an updated podcast and let people know what we think about the markets that are going down 500 and 600 points a day, or shall we just head straight to Bora Bora and come back in a year and see if the world looks different?
You know my vote.
Today is Monday, August 8th, afternoon after the market closed down a little over 600 points. I'm Joe Terril, president of Terril and Company, and with the help of Mr. Baker, we will give you our thoughts on what is happening, why it happened, how long we think it will continue, and maybe throw in our opinion about what's the best investment advice and how we intend to handle this for our clients. So, Jesse, I guess with that said, let's go in the other room and get at it.
Sounds great.
What's happening right now by markets is somewhat similar to 2008 in this fashion. In 2008, investors all over the world demanded that financial institutions clean up their balance sheets, become more responsible, cut risk, and also become more conservative. Financial institutions heard that, and whether they were insurance companies, brokerage firms, banks, combination of bank, insurance company as we have in Europe, for the most part, every financial institution in the world got the message and did the same, including raise capital. What's happening now is investors are demanding that governments all over the world do the exact same thing. Part of this problem that we've experienced with the investment markets in the last couple of weeks has started with European countries that are borrowing money. If you will, their balance sheet is out of control, it's somewhat reckless, and they have not come up with a plausible plan of how they're going to balance their budget, and stop demanding to the rest of the world, loan us more money so we can live beyond our means. When the United States had to raise its debt ceiling limit and really didn't accomplish a great deal, foreigners, and we must remember that the economy is dependent upon a worldwide economy, as is investment markets. Foreigners from outside the United States voted no confidence. They were very upset that the United States did not tackle the entitlement problem and the fact that we shaved very little off of a continuing 10-year budget deficit. This caused the dollar to begin to go lower, and day by day caused investors to begin to sell. This is accelerated as more and more financial people are coming out and stating that the United States did not do enough, other countries around the world are not doing enough, and we need a roadmap for these 10 or 12 countries to follow to become fiscally responsible with their balance sheets and hopefully with the amount of money they borrow. So this vote of no confidence, if you will, didn't get addressed until now because people were willing to buy the bonds. The European Central Bank will buy the bonds of Greece, Italy, and some of the other countries there. But now investors are taking it a step further. They're no longer willing to just accept on fact that, well, the European Central Bank somehow will continue to buy the bonds of these otherwise bankrupt countries. They want to hear what the strategy is of these countries to stop spending more money than they bring in. How are these various countries going to deal with their own entitlement programs and problems that they have? Carry this over to the largest economy in the world, the United States, in the fact that the US dollar is the world's reserve currency, and you see an exact same situation. The balance of the world wants to see us do something about a $1.5 trillion budget deficit. It is not a political statement. They don't care whether we raise taxes, cut spending, some combination. All they want to do is see that we're serious and we're not going to continue year after year to live way beyond our means and ask the rest of the world to finance it for us. So, with that said, part of the reason that this is an issue is the economy. When countries run these type of budget deficits, when countries put this type of strain on the balance of the world to finance, there is an economic thought that that is bad for the world economy and it can create a worldwide recession. Other countries want to see us in the United States stop the aggressive, let's borrow money and spend to the hilt, whether we have it or not, type attitude. So the world economy is already beginning to slow down. And it's slowing down because there's no confidence that this reckless budget deficit issue is going to solve itself in any manner. And if you see, which you do now, and you hear companies talking about this on a regular basis, you see people postponing spending plans, expansion plans, hiring plans, because they're worried about how is this budget deficit problem in Europe and the United States, how is that going to affect the world economy? And they're very fearful it's going to affect the world economy in a negative fashion. Therefore, they're reluctant to make commitments. When people are reluctant to make commitments, then there's less economic activity, not good. So, with that said, there needs to be confidence restored with investors all over the world that this problem will be resolved. And it's not going to be resolved by the European Central Bank saying, well, I'll buy up the bonds. No, they don't want them borrowing money anymore. So this is, as I mentioned, Monday, August 8th. I think this week the markets probably continue to go lower until perhaps either Geithner is Treasury Secretary, Bernanke is head of the Federal Reserve, President Obama, John Boehner as Speaker of the House. It's going to take a bipartisan group standing in front of a camera assuring the rest of the world that the United States is not going to let the US dollar continue to go down, that what we did 3 or 4 weeks ago is just a start, that we're absolutely without question going to solve this budget deficit problem. And the main thing is we're going to do it without printing money, and we're going to restore the integrity of a US dollar. If we can assure the rest of the world of that, and they'll believe us, then the problems that we're having with the market will solve themselves. Right now, there are a lot of good buys on Wall Street, particularly with some of the income type vehicles that are selling very reasonably. Markets are worried about people's ability to pay, worried about what will happen if we have a severe recession. And I think most of this week we'll see things get even cheaper in price. Obviously, politicians will not catch on to this until somebody hits them upside the head with a baseball bat, and then they end up doing the right thing. But for the moment, I do expect the market's going to go lower. At some point, we will be a buyer. Major corporations that do business all over the world that are paying nice dividends are valuable assets to own. And those stocks are valuable, and we will buy them if investors want to continue to sell them and want to run them down to reasonable prices. Those of us that have watched the previous podcast over the last 3 to 4 months, or even some of the written comments that we post on our website, know that we've been negative now for 3, 4, 5 months. I am surprised by what's happened, though. I thought we would have a severe thunderstorm and prepared for such. What we've actually had now is a hurricane followed by a typhoon right behind it, and I do think it's a little bit overdone. This is a long-term positive. If countries all over the world can force their neighbors to act financially responsibly and cooperate with economic trade, it is good for the world economy. And the fact that the rest of the world is going to force the United States as well as other countries to live within their means and be a financially responsible citizen of the world, that is a big, big positive. So we have to look at this short-term negative, long-term very big positive, because I do think this is going to force the issue in Portugal, it's going to force the issue in Italy, Greece, and certainly it's going to force the issue in the United States. We cannot isolate ourselves from the rest of the world. The balance of the world has given us a gigantic vote of no confidence, and we're going to have to deal with it. We are dependent upon the rest of the world, and this is an issue that is going to have to be addressed, and hopefully will be addressed in a correct manner. There's no basis for burying future generations in debt and theoretically 10, 15 years from now turning over massive amounts of debt to a future generation and say, here, you figure it out. We wanted to live beyond our means. We wanted to have programs that we couldn't pay for. We wanted to have benefits that we were unwilling to pay for. That's not going to work. The rest of the world doesn't like it, and we shouldn't like it in the United States either, and we should demand a solution to it, whether it's a balanced budget amendment, whether it's some combination of increasing taxes, cutting spending. But the real difficult issue here is entitlement programs are going to have to be addressed. We cannot have the entitlement programs we have in this country and afford to pay for it. We just don't have that much money. We don't make that much money in the course of a year, and it can't be done. So we're in somewhat of a real problem here, and I'm glad that the balance of the world is going to bring this to a head, and there's going to have to be a solution found to the problem. And until the balance of the world is confident that there's going to be a solution to this problem, markets are going to be tender. But there will come a great buying opportunity, and there will come a solution that's a long-term economic positive. This is Joe Terril, president of Terril & Company, private wealth management firm in St. Louis, Missouri, with approximately $500 million of assets under management. Thanking you for tuning in, and please monitor, and we will be back with updated webcast as necessary. And thank you for tuning in.